Where do we get the home price data from, GC?
There are a billion places for you to go online and find out what is the home price, the median home sales price in your neck of the woods, right? Some are better at providing the data, some are worse. Some use some segments of the population size, meaning like the market size. Some exclude other things. So as an investor, if I'm putting myself in your shoes and you don't have access to these consultants, right? What is one standardized way to look at home prices data across the board? And I chose Zillow. And I chose Zillow because it's free, easy, accessible. And whether or not you think Zillow is 100% accurate is not the point here, because I'll share with you, right? When you look up Zillow here and you see that the median home sales price or the home value index according to Zillow in Jacksonville is 274,000. I have access to the multiple listing service, and the median home sales price in Jacksonville is about 325,000. So I know it's not 100% accurate, but what this allows me to do is then standardize and benchmark across the other real estate markets we're going to compare to. And that's the real value. Is it easy, free, and can I standardize it across the board? And that's really why I would choose Zillow for you to do that here. So there's the link right there. Some of these links are going to be funky. So we'll share this link. So there you go. So easy, free, accessible, and able to standardize. So what I did is I went to the common comparable cash flow markets out there, which you guys are going to see. It's Memphis, it's Kansas City, it's Cleveland, it's Birmingham, it's Dallas. And I went to Zillow on all those and just randomly, or not randomly, I just pulled it for that day. What is the home value index for Zillow? And the cool thing is I kind of like stress tested this a little bit. Of course, if I'm going to present it to you guys, I want it to be, up to the standard here. The prices for those other markets were roughly about what I would have expected, right? In Jacksonville, it's about 274 is what they estimated. It's 325 based on the real MLS data, right? In the other markets, the one that I would have expected to be a lower cost were lower cost. The ones that I would have expected to be higher than Jacksonville were higher. So good enough data. And then the key here is free, accessible, and standardized. I'm looking at overall markets now. Right? I'm not looking at individual properties. I think Denny just mentioned something about how Zillow is quite inaccurate on an individual property. That is real. I would not use Zillow to make individual buying decisions. But if you're looking at an overall market for the practice of what we're trying to do here today to compare real estate markets, it's good enough, right? Not perfect, but good enough. And there's really no other alternative unless you want to pay for the data or unless you're a real estate professional. And you'd have to be a real estate professional who's licensed in every MLS across all of these markets. It's just not feasible. So not perfect data, but for this exercise, good enough and really quite critical to being able to objectively measure performance in each of these markets, which we're going to get into in just a minute here.
All right. So we're getting the home prices from Zillow. The next thing that you mentioned was rent prices, right? This is another reason why you want the median incomes going up so people can afford rising rents and we can continue to cash flow these properties, right? Where are you getting this rent price data from, GC?
Yeah, the best source for rent price data that's free, accessible, and can be standardized is the US Census. And so the latest data that they have released, I believe, is from 2019. And yeah, so from 2015 to 2019, is the median gross rent. And you can just go to this link here that you see. It's kind of funky, so you'll have to check the show notes if you're listening on the podcast. But you can just put any city in here. And so Jacksonville City here has a median gross rent of $1,065. And you can see the United States overall is $1,062. And you can just run those same rent prices for the other 5 markets, which we're going to compare here, or any market that you want to compare.
How accurate is this stuff? Is this kind of like Zillow where it's not exactly accurate, but it's going to be same market to market kind of thing?
So it's important that we're standardizing it, right? Is it the most accurate? No. And we also have to realize that we're taking data from 2 different sources here, right? We're taking Zillow data source and we're taking the US Census rents data source. Right? Unfortunately, there's not one collective data source. So you don't know if they're using the exact same numbers or what area are they counting versus what are they not counting, right? So it is not 100% accurate, just like Zillow wasn't 100% accurate. However, we need a bridge. We need a bridge to make sure that for that $274,000 property, according to Zillow, that the rents are comparable for what that rent would be. And so one thing you'll see in the analysis here is that I've used my own expertise because I see what a JWB property rents for. That's a $274,000 property. And then I've factored that up to make sure that the rents are standardized across the board. The figure that I used happened to be 50%, right? So I used a 50% figure. I took the US Census rents. I increased that by 50%. And that came out to what a typical cash flow would be for a JWB property. And then to standardize that across the board, I did the same thing for a property in Memphis, same thing for a property in Kansas City, Dallas, so on and so forth, to create this standardized approach, even though that specific number, 1065, is not accurate for a $274,000 property. The main thing here is you need a bridge. You need a way to keep the standardized approach, but factor it up based on knowledge of the asset class. And that's really what I did.
Got it. So basically, would it suffice to be more seeped in one particular market? And if you know the data for that market, then you compare that to what it says on the census and then use that multiple for all the other markets.
Exactly.
That makes a lot of sense. The next data point is home price appreciation data. How are you figuring that one out?
Yeah, and I love being able to share this in a simple way for everybody to be able to learn from. I get this question all the time, and I frankly, I wish everybody knew how to run their own home price appreciation data, because it is often overlooked and people invest in a different market thinking that they're going to get the best overall return on investment. It just doesn't happen. And they could have known this ahead of time. So what we're looking at here is the Federal Housing Finance Agency's website is on the left here. They offer this FHFA HPI calculator. That is a way of calculating what your market's median expected value is, which is another way of saying expected price. And you can calculate that knowing what they do internally is they calculate what their home prices have appreciated at. And then you can use this data to figure out what your market's home price appreciation rate is, even though they don't exactly share it with you. So you got to be you got to kind of know how to work the system here. Let me explain this a little bit easier here. If you guys go to that link there, which again, we'll put in the show notes. You guys can go and check it out if you're watching live here with us.
Which one of the links do you see? The FHFA one or the Good Calculators one?
The left, yeah, FHFA.
Okay, got it.
Just go there. It'll take you right to this calculator. You just simply put in your MSA, which is your metropolitan statistical area. It's the region the market that you're looking at. Put in Jacksonville. It'll let you go back to 1991, which is great data, right? It's 30 years, a little bit more than 30 years of data. And then you choose your valuation quarter. I would choose the most recent quarter, which happens to be 2021 Q3, based on what they have today. And then you can just choose a purchase price, right? I chose $100,000 because it's easy, right? Doesn't matter what number you choose, but you just choose, call it 100,000. It's going to kick out what your expected value for your market is in that quarter, which happens to be $432,000 for this quarter, quarter ending Q3 of 2021. So what that means is if you invested in a property that was $100,000 in 1991, according to the Federal Housing Finance Agency, that property would most likely be worth about $432,000 in Q3 of 2021. All right, so it's good to know, but that doesn't tell you your home price appreciation rate. You then take that information and you just go to a free online calculator. I use good calculators because it's good and it makes me feel good. So you can use good calculators if you want.
Marketing.
And it's really simple. You guys can go and check that out as well. There's a link right there. What you're doing now is you're figuring out your home price appreciation rate because you have the figures. Now you have to figure out the rate. And so it's easy to fill out, right? You choose $100,000 as your purchase price. You choose the dates in correlation with the dates that you chose on the previous calculator. And then what it does is it kicks out a home value appreciation, which is that's the key. That's how you figure out how much your market has appreciated since 1991. And a data point that most investors never understand, but is critical because the theory and the application, the data behind this shows us that most real estate markets tend to repeat themselves over a full market cycle. So if you're in a market and you have really low appreciation right there or lower appreciation, you should probably expect less growth over the next 20 years. If you're in a market that has above average appreciation like Jacksonville does, you should probably expect above average appreciation over the next 20 years, fully knowing that it won't always be that year over year. But supply and demand work, population growth matters, and generally you'll see roughly the same amount of appreciation given that full market cycle.